Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Also help you a wrap up of the way the markets have traded through the trading session and what can we expect going forward from here. And also post the earnings now. Where should your focus be in terms of sectors and the stocks that are likely to give you promising returns, even in this consolidating phase of the markets as well. We'll also be joined by an expert. But first up, a quick check on how the markets are doing as we begin the closing hour of trade. Now, when we see there's a, almost markets are looking at trading at the day's low point. If you see, the Sensex is hovering about 275 points lower today, 60,725. Look at the Nifty as well. It's not been able to hold that 18,000 mark and also has slipped below that 17,900 mark as well. Down by 85 odd points, it's hovering near 17,860 currently. About a 0.4-0.5% of a decline is what you can clearly see in the markets right now. Of course, dragged by the oil and gas space, power, metals, and even some of the heavyweights, including the banks and like stocks like Reliance Industries, not doing too well in the markets right here. Let's also look at how the broader markets are doing in terms of the mid and the small cap indices. There's a divided trade. The mid cap 100 index is up by a 0.25%, while the small cap 100 index is down by about 0.25% as well. In terms of the sectoral moves, like I pointed out, most of the sectors of the Nifty are down in the red, weighed down by Nifty Bank, which is down by almost a percent, dragged largely by the PSU Banks today, and the financial services pack as well. The metals are not doing well today. The royalty space has also seen a decline as well. And apart from this, the pharma pack is also down by about 0.75% all right here. The only two sectors that are holding up into the green right from the word go, we did see some buoyancy in autos and IT, and that's continuing to hold up towards the end of the session as well. But the market breadth clearly in favor of declines, with 31 stocks in the red as far as the Nifty stocks are concerned right here. Which are the stocks that are dragging the most? You can see Cipla dragging the overall pharma index. Of course, this was the overhang of the news flow from US FDA and the observations on the Indore unit. The stock is down by over 6%. Adani Enterprises dragging 6% too. BPCL, UPL and Britannia, the other laggards at this point in time. What's holding up? Some of the stocks from the cement pack like Ultratech Cement, Metal Pack, Hindalco holding up. Tech Mahindra, HDFC Life, Divis Laboratories are actually showing some kind of a gravity-defying move today. But time now to welcome our guest for the day. Shahina Mukadam joins in. She's an independent market analyst. Welcome, Shahina, and thank you so much for taking the time out for this discussion. Well, help me understand your view. What is weighing on the markets right now? We've not been able to break out of this range. Every week there is slight effort on a day or so, but next day we do see the markets coming back into the range. What is really not been able to help the markets pull out of this place, and what trigger will really help the markets break out of this range going forward?
Well, see, if you see the results that were out, the third quarter numbers, they were clearly showing stress in terms of profit growth. So there were very few sectors that actually did well, and a lot of companies came out with, either lower profits or some issue on growth, overall growth. So I think these issues plus the valuation of the overall, the P on the overall market that was there to start with at the end of the last quarter numbers, or I mean, let's say the last couple of weeks, is already on the higher side. So, in terms of enthusiasm to expect the market to move up substantially from here was never there. So the issue is it's in a consolidation move, and in fact, in my view, there is a little bit of nervousness because there are a lot of issues still that are there, like in terms of Fed continuing to increase rates, and which could see further outflow from Indian markets. You see some of the large groups having problems within, the overall market. Some of these sectors are not really doing well, like metals that really did well last year are not really doing well that this in the current year. So there are pockets which are actually dragging down the overall market. So I think to an extent, the best we can expect is a consolidation around this range of plus minus 500 points at best.
Okay, but let's talk about earnings a little bit more in length to understand, or to help all our viewers also to get a better sense of how to be approaching the markets and various sectors post the earnings as well. Overall, you did say that most of the earnings really disappointed this time around with lacking profitability right there. What was the earnings beat versus miss ratio, if I could ask you, for you?
Oh, the earnings beat versus miss was actually pretty low. So there were more stocks that I would say which gave inline numbers,
Yeah.
but they were already it was already estimated by the market that the numbers would show a bit of pressure in
Hmm.
terms of overall profit growth. But I think some of the sectors that did well were the banking sector, the BFSI sector. Banking
Okay.
sector did pretty well, especially if you see the large banks. You had ICICI Bank, HDFC Bank, SBI Bank, and even some of the smaller ones like DCB. All of them did very well. So I think those that sector did well. We had auto that did reasonably well and continues, like we have got the numbers that have come for the last month also. So auto numbers are also showing good bit of uh, I would say strength, and some of the FMCG stocks, FMCG sectors, that did well. I think this was about it. On the downside, we had metals actually that actually dragged down some of the insurance companies, some of the oil and gas based companies didn't do that well. So I think
Hmm.
it was a relatively I would say the banking sector did well. So I would
Right.
put my bets on the private banking sector even going forward.
Okay, so would it be the large caps that you would stick with, like an ICICI, HDFC, Axis Bank? Would you go for the mid-rung banks? How would you approach them now?
Yeah, I would go for the large caps, which actually in the same order that you said, that would be SBI. Of course, you can add to the mix,
Yeah.
and in the smaller caps also you can look at some of the smaller cap banks, like I mentioned DCB Bank, which look pretty interesting, both in
Hmm.
terms of numbers as well in terms of the movement addition that some of the institutional investors are making. So I think
Hmm.
that also looks good on the small cap side.
Okay, and what about the public sector banks? Only with the SBI, do you still have confidence despite the kind of rally that we've seen here? Can the earnings fuel further momentum to some of these stocks?
Yeah, I think SBI, like for example, I mean, if one has to be in a PSU, it's better to just be in SBI because if you see in terms of valuation, SBI is pretty attractive. Core earnings, book price to book 1 year forward is about just slightly over one time, which is not at all expensive for the size of the bank. And they have got despite having exposure to some of the groups which may have problems going forward, but if you see their PCR, that is the provision coverage ratio, at 76%, which was slightly lower than the previous quarter, but it's pretty high. So I think that is one bank that will continue to look good in the medium to longer term.
Okay, okay, understood that. Since you talked about autos, also you preferred some of the earnings right there. Which are the names that you would be going after the earnings in the auto space? Would it be from the four wheelers or the two wheelers pack? What gives you confidence?
I would go with the four wheelers because I think two wheelers. Of course, the four wheelers did better in the last quarter numbers compared to the two wheelers, and I do think there is still some overhang in the two wheelers, both in the export market as well as in the domestic on the EV front. So
Hmm.
there is a bit of pressure. But on the four wheelers, they came out with very good numbers, and I think all sectors, CV, HCV, LCV, as well as the passenger vehicles. All the three segments have done well. So one can take their pick. I think, of course, Tata Motors, if you look at it both technically as well as fundamentally, for the shorter to medium term, looks better compared to the others. But I think even M&M and Ashok Leyland, which in fact Ashok Leyland is one of my preferred picks if you look at the
Okay.
CV space. So I think all these stocks look good for the medium to longer term.
Okay. What about the tech space, the IT space, the earnings? How did you analyze for some of these large cap and mid cap IT firms this time around? We've seen a considerable amount of bounce in the last 2 or 3 weeks, and IT stocks making a comeback, or at least making that effort to come back after that huge underperformance in the last year. Do you think the earnings has given another, light to some of these stocks that are already seen a huge cut in valuations?
Yeah, I think IT has underperformed, and one has come to the realization that IT spends globally, while there is a slowdown, no doubt, which is actually what led to the underperformance in the last 1 year. It the type of IT stocks that we have in India, which is more service related, there is going to continue to be demand and growth going forward. They have shown it in the numbers that they have come with in the last quarter also. I would say in the last couple of quarters also. And while you may see some bit of cost pressure, but I think overall IT stocks with the with valuations now becoming more attractive vis-a-vis the other sectors, I would say that slow and steady you'd see funds, institutional investors adding back to the portfolio and the stocks moving up. Not to say that any of, like, see TCS and all, if you see stock performance, while it may have underperformed an actual percentage over the last 1 year versus the overall sector, or even for example versus the overall index, but I think the stock has not actually corrected. So retail investors, if we are talking to retail investors, I have always maintained, please be invested in stocks like TCS, Infosys, if you're looking at the IT space for the long term. These are portfolio stocks.
Right, right, absolutely right. Since I'm talking about the technology firms, let me also ask you about the new age tech firms, some of these fintech players and the consumer tech majors that have recently got listed. They've gone through a whole period of volatility, first listing at peak valuations, then seeing a huge carnage in most of them. But in Q3, there have been some slight promising signs for some of them at least when it comes to questions that were being raised on the profitability factor, operational profits as well. And at least when we talk about the management commentary on the guidance going forward as to their efforts to become profitable. What did you make of the earnings over here for the likes of, say, Zomato, a Paytm, PB Fintech, or a Nykaa right there? Any signs of confidence that you got from the Q3 earnings that may make it, worth it to look at these stocks as a fresh opportunity?
No, not really. Because if you see the last quarter numbers and if you see the analysts, reaction post numbers, a lot of them have actually cut earnings estimates for the next year. If you talk
Okay.
of Nykaa, you talk of Zomato, and on the other hand, if you see the valuations, though the stocks have corrected massively, if you comparing it over a 2 year from listing time, but still, if you see valuations, they are not at all cheap. So I would advise retail investors to stay away from all these stocks for some more time. And this is not to say that there will not be great companies 5 years down the line. But I think one can wait and look at it. Let the consolidation phase happen. I don't think retail investors need to jump in and buy it as of now. So
Okay.
if I'm looking at platform stocks, there's just one stock that probably I would buy even at current levels is Reddington, which
Okay.
actually where the valuations are very attractive. So basically, I would look at stocks where the valuations are attractive and look to invest for the long term. The remaining, I would just wait and track and then relook at it maybe 1 year, 2 years down the line.
Okay, understood that. Now let's also talk about this one pocket that has been in the limelight for at least last 2.5 weeks or 3 weeks now, and that's the Adani Group of stocks. We do remember that the way Adani Group of stocks has hogged the limelight on the budget day, and post that also there has been a huge carnage, and the entire market setup also was seen being impacted with this news flow around the Adani Group of stocks. There have been some signs of buoyancy returning in the last week, but again there has been very extreme volatility that we've been witnessing on most of the stocks from the Adani Group. But from the earnings factor, I wanted to understand, what did you really make from the earnings from the Adani Group stocks? Are there any stocks that you would believe that after this carnage, because of the earnings and the fundamentals, one still stands a chance to look at some of these Adani stocks, in the current realm?
I would look at the cement pack of the Adani Group, and also, of course, the FMCG, that is Wilmar. So, Ambuja Cement, ACC, these and of course Wilmar. I think these stocks, in terms of valuation, have started looking fair. Like let's take up Ambuja Cement. Like for example, Ambuja Cement now currently at current levels, it's available at about $140 EV by EBITDA. So EV per ton. And if you look at say Ultratech, it's 200. So $200. So I think to that extent, yeah, valuations have become attractive. But at the same time, as a retail investor, I would still avoid these stocks despite me believing that valuations are fair and it is possible that the stocks will consolidate at current levels. Because see, there is another issue which is technical and which is sentiment based for the whole group, which actually affects the medium term price movement for stocks. So because of that, I would avoid investing in any of the Adani Group stocks as of now for the next couple of months. Let us see how things unfold, and then probably one can take a position.
All right. Well, in the end, China, I wanted to understand from you, big sectoral or stocks earnings upgrades that you have done after Q3 and where you have downgraded, and, where would you advise investors to stay away from and go in, with all their funds all in right here.
Yeah, like for example, some of the sectors which did well and which I think most people have, in fact, analysts have upgraded, would be banking. So I would say private banking, private sector banking, some of the few public sector that we discussed. I would look at some of the auto stocks that we discussed. You could have some investments, FMCG, ITC. I mean, earlier we used to talk of ITC target of 350. Now we have moved it up to 400, 425. So I think it still looks good. The numbers were good. I think that still continues to look good. Telecom, you can look at something like Bharti. So I think they're across the board. There are stocks which you can look at in these sectors. If you're looking at a contra bet, I think metals has done very bad. I mean, didn't do well in these numbers and continues to look a bit weak. So I would keep a track and I would pick up at lower levels as a contra bet for the long term.
Okay, understood that. Well, thank you so much, Aina, for being with us on the show and sharing with us all those insights on what should be investor strategy post the Q3 earnings and how do we approach some of these sectors after the earnings as well. And we shall continue to discuss more about markets going forward from here too. Many thanks for being with us. Right now, if we speak, 300 points down for the Sensex, 60,688. The Nifty is hovering about 100 points lower at 17,843 as the current level. So the markets are down in trade. Of course, there is the impact of the upcoming expiry that we will be looking at for this series as well, and there is of course some overhang of the impact of inflationary concerns from across the globe that's also weighing on the sentiments right here. But on the earnings too, like how Shahina pointed out, that the markets have not got very encouraging sentiment boosting factors from the earnings as well, and that perhaps is also another factor that has not been able to pull up the markets from this range. But we'll continue to look at how and which are the factors that will continue to impact the markets, and for that you should stick with us on Business Today TV. Don't forget to subscribe to this channel, and also you can stick with us via our other social media platforms, that's Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in for now.